Hi everyone, Emily Wallace, your buyer's advocate, and I am so grateful to be joined by Daisy Stevens from Clover Financial. We're going to be covering a topic that is the Royal Commission.
We are.
Thanks for joining me, Daisy.
Thank you so much for having me.
It has been a hot topic this week, and I guess we want to come from a point of educating people around why it occurred, what some of the findings have been, and how that impacts people who are looking to buy residential real estate.
Definitely, and that's what we're going to go through today.
Yes.
Some really clear, informative, concise information about the facts of what's come out and how that will impact you as a residential borrower.
So first question, and probably an obvious one, but some people may not know.
Yeah.
Why was the Royal Commission into Banking held?
So the Royal Commission into Banking was there to inquire and report on misconduct within the financial services sector, and they delivered a report with recommendations so that we can improve the trust within the financial services system.
Great. And there were 76 recommendations
Yes.
that came out of it. That's a fair number. And I think what people may or may not realise is that those recommendations are perceived to be in the best interest of the general public, but I think we might want to talk through some of them to highlight that perhaps they may not be.
Yeah.
So what are some of the impacts of the recommendations that have come out?
Definitely. So one of the first ones, which has been wholeheartedly accepted so far by mortgage brokers in the industry, is the best interest.
Yes.
So what they're suggesting is that what we're going to do moving forward is when we recommend a product to a client based on their needs, it's going to be in the best interest of them.
Yeah.
Okay, so previously we would recommend something that is not unsuitable. That was the requirement under the NCCP.
Right, yes.
But now it's in best interest.
And that's a really big difference in definition, I guess.
Yeah.
Best suitable versus best interest, or not suitable. So that's a great one.
Great one.
What else?
So the next one, which has had a lot of media coverage, is in regards to broker remuneration.
Yes.
So in regards to how we get paid for assisting our clients.
Mm-hmm.
So at the moment, if a client comes and needs our help, we actually get paid direct from the financial institution that you end up taking the loan with.
Yes, and most people are aware of that, but maybe not beforehand, so that's great to let them know. And now what might be the case?
So the way we get paid is in two stages. You get an upfront commission and then you get a trailing commission. So by July 2020, the recommendation and the government has agreed that they are going to be removing trail commission.
Right.
Okay.
So no ongoing payment for brokers.
Correct.
Right.
So if I settle a loan today, for example, we will receive a monthly payment.
Yep.
For a $500,000 loan, that might be $40 a month.
Right.
To be able to continue to service the client and their needs throughout their life journey.
Sure.
But that's going to stop. However, we're still going to get paid an upfront commission.
Okay.
But there has been a recommendation by the Commission that should potentially be reviewed and cease to be paid after 3 years.
Right.
Yeah.
So then where do you get paid if both of those go?
Yeah, so what the Royal Commission has suggested is that the clients now have to pay a fee for service, so to pay us directly out of their own pocket,
Right.
and the bank's not assisting them with that service.
I guess that's really tricky, because a lot of clients, like I know when I have buyers come to me, the first thing I say is, are you pre-approved? And if they say no, I say go and see a broker. I've got brokers, you know, they're awesome, and you have access to so many lenders.
So many. So some people will have access to over 20 lenders, some people will have access to over 40 lenders. Different banks will offer different products. Different banks will have different time frames of getting loans approved.
Yes.
So if you need to get it settled quickly, you may choose one bank over another. They'll have different niches, so depending on the way you're paid or the complexities of your situation, returning to work after maternity leave.
Yes.
You know, different banks will consider income differently. So what we've well, what we've read, the advisor actually brought out a survey.
Yes.
They commissioned a company independently to come out with a survey.
Great.
They surveyed just under 6,000 people.
That's a decent data size.
Yeah. And what they found was just over 96% of consumers who have used a mortgage broker
Yes.
are not going to be willing or able
Right.
to actually pay the broker directly.
That's huge.
Yeah.
That's a massive percentage that have seen the value and used the service in the past, but now wouldn't consider doing it, paying out of their own pocket.
Or might not be able to.
Exactly.
as
Well, that's the other thing. When you've saved for a house, you've saved for a deposit,
Yeah.
any other expense is so great that sometimes you just physically can't actually pay that.
Exactly.
Yeah.
So what could happen? So if clients had to pay for that themselves,
Yes.
they're forced to potentially not use that service,
Yes.
go direct to a financial institution, often those that have large branch accesses,
Yes. Yes.
which is often the major form.
Yep.
We're going to find people who may live in rural areas not be able to access finances easily.
Yes. Yeah, that's a very good point.
We're also going to find that potentially if someone walks into a branch, applies for a loan, not backed by that particular financial institution's policies,
Yes.
will get declined, go somewhere else, apply, might get declined, until they eventually find the right one.
Yeah.
That's going to impact their credit score.
Exactly, and that's, well, a broker is your personal shopper for you and goes and doesn't get things against your credit score like that.
That's it.
Because you're informed and you know which one's going to line up properly, whereas the average person doesn't know until they actually go forward and do that, and that can really hurt you.
And that information at this point in time is also not transparent. So that is one thing that a consumer is unable to do,
Yes.
is research different banks' policies and procedures.
Yes.
They're going in blind.
Yeah,
Yeah.
and that's not great at all.
No.
So there's certainly impacts that are going to come into play here. I know the Royal Commission's only just come out this week with the findings, but it's good for people to be aware of the possibilities of outcomes and how it impacts them, particularly if you are a residential buyer, potentially having to pay for the service of a broker or just not being able to access a broker is really confronting.
Yeah, it is. And I think us as an industry, us when we're communicating with our clients at the moment,
Yes.
we're trying to stay incredibly positive, and I think a lot of us are putting out the message that if you are going to be considering obtaining finance, over the next 12, 24, even 36 months,
Yes.
now is probably your time to actually go and get that advice, experience it for yourself, what it's like to meet with a broker,
Yep.
and sit down, work out what you've got to do, and hopefully, the future won't be all that bad. We've got government officials, leaders in the industry who are going to be lobbying to try and prevent the end position for clients being a change of interest rates or niches or etc.
Yes.
So I'd recommend going and getting some advice and seeing what's ahead of you.
Definitely, I think that's a really great idea. And if you're considering, sitting on the fence about thinking, how much pre-approval you could get for a home or that investment or a purchase, maybe now's the time to act on that. So Daisy, thank you so much for coming in.
Thank you for having me. It's been great.
Absolutely, really informative, and I hope that you have taken something away from today. So thanks, Daisy.
Thank you so much. Thank you.